Well, good afternoon, traders, and we're at a very interesting point now in this market dynamic. The markets are looking for a circuit breaker. There's not one that's immediately available, and certainly what we've seen today is this increase in market volatility. The stage was really set last week. The market wanted more of a response from the Federal Reserve. They wanted to know that they had the support from the central bank there. They didn't get it. Obviously, the Fed coming out and saying that we're in this mid-cycle adjustment. The market's saying, well, we're probably not seeing that level of aggression, that urgency that we were looking to hope for. And now we're starting to see the response from financial markets that will push the Federal Reserve to being more aggressive in the September meeting. We will see the ECB cutting rates, I think, in the September meeting, something now that the market placed 100% probability to. The fact that we're now seeing not just a re-emergence in the trade tensions, but signs that we're actually going back to square one. The markets do not know how to handle this situation. Of course, it's all about risk aversion now. The yen is in focus. Have a look at dollar yen at the moment. We can see that trading below 106 at the moment. But it's also really down to what we're seeing in the currency markets more broadly. Last week in the trade of the day, and chart of the day, we talked about what we're seeing in dollar CNH, the offshore renminbi. That is where we're seeing the volatility kick in today. There has been some headlines that suggested that the state administration have effectively told importers not to buy US agricultural products. I can see that completely infuriating Donald Trump if it's true. What I think will also be a direct message to Donald Trump, and when the market saw this, we saw volatility really kick up, and that was when we saw the Chinese fixing coming through at 11:15. We saw the PBOC fixing the midpoint of dollar CNY up 229 pips. Now the market was not looking for that sort of move. Most strategists estimates and their models were saying it was going to be somewhat less than that point. So the market has taken that as a direct statement that they are going to potentially allow the renminbi to weaken. And if you have a look at dollar CNY or CNH, you can see this significant move up today. And as soon as that happened, we saw the Australian dollar drop through 68 cents. In fact, we've traded down to around sort of 67.40s into those low levels. We've seen gold breaking out of this consolidation range. Gold in US dollars has really broken out. Whether we can close above 14.48, I think, is key. If we can close above that, certainly then that leads us to a belief that we could get up to 1500 in the sort of medium term. It's not going to happen overnight, of course, but certainly that consolidation we've been seeing, sort of 14.48 down to 13.80, will have given way, and that obviously be a bullish situation for the gold price. Yeah, gold in Aussie dollar terms looks even more compelling. You can see that on MT4 and MT5. You can see that at record highs at the moment. But have a look at the indices. Absolutely getting taken to the cleaners today. The Hang Seng having a 3 standard deviation move. That is down 783 points, or over 3%. The Japanese market obviously not liking this yen strength we've been seeing. The Swiss franc also looking pretty attractive, but the Japanese market just looking like it might want to go and test the 20,000 level in the short term. The ASX down 96 points at the moment. It's a decent whack for us here in Australia. It's all materials, down 2.2%, as you'd imagine. Those growth stocks finding some pressure there. Volumes in Australia are a little bit light, 10% below the 30-day moving average. But if you go to volumes that we're seeing in China and Hong Kong, some very big volumes coming through there. It's about capital preservation today. You're asking questions around the circuit breaker, and you're not finding those answers anytime soon. Of course, in that situation, order book dynamics take hold. You see people selling, asking questions later. If you have a look at fixed income markets, you can't see it on any of the charts that I put up here, but the market now is saying that the implied probability of a rate cut in September from the Fed is not just fully in the price, but we're back to about 30% chance that we get a 50 basis point cut. It's probably why we're seeing dollar yen where it is at the moment. You can also see that in yields across the curve, you've got 2-year yields down 8 basis points, 10s down about 8 as well. So there has been a bit of a flattening of the curve. I think if you see 2 10s go below 13 or basis points, you head down to 10. You go through 10 basis points on 2 10s curve, I think implied volatility kicks up. So that's where we are. Markets looking at what's happening in trade tensions, actually seeing both sides going further and further apart. They're seeing what's happening in the weakness in the renminbi today and saying, are we back to currency depreciations, which is why you're buying gold. There's a lot of questions, I say, not many answers. I think in that situation, you're going to see risk aversion kick in.